Good afternoon and welcome to the Wall Street Crossover Show sponsored by Admiral Markets and with their market commentator, Darren Sinden.
Good afternoon, Zach.
Right, how are you on Friday the 7th of August, the day of the July non-farm payrolls?
Very well. Obviously very much anticipating the number and wondering what's going to happen, what the number's actually going to be and what that's going to mean. It's been really a week of interest rate and intrigue, I suppose, is how we'd have to describe it. And you know, this afternoon could be one of the most defining moments of the year.
Right. Well, obviously we almost always say every non-farm payroll number is the most important, but this one looks like it really is.
Yeah, there's so much hope and expectation around this number. It could be the catalyst for the Fed to start raising rates in September. We don't think that's the case, but of course we stand to be proven wrong if the number comes out very positively. Okay,
well let's go on to our normal agenda, which starts off with the European movers. The data released over the European session, rather.
Yes, indeed. So we've had some industrial output numbers today. Starting in France, industrial output for June came in at minus 0.1%, well away from the forecasts of modest growth of plus 0.2% and significantly lower than the prior read of plus 0.4%. So that's the sort of third or fourth worrying data point from France in a row. Perhaps more surprising, though, was the fact that we had a similar wobble in Germany. So industrial output for Germany for June down 1.4% against a forecast of growth of 0.4% and a prior read, which admittedly had been revised up to 0.2%. So what the point I think is interesting to make here is that this conflicts very strongly with the positive factory order data we saw out of Germany last week. And if you look at a chart of the two indicators, they are roughly correlated. So there's a bit of divergence there. We'll assume it could be on a seasonal basis, but again, a concern for the ECB and the German government. And then some slightly better news in the UK with our trade balance for June coming in at a negative £9.184 billion against the forecast of 9.2, so marginally better, though sharply lower than the or higher, depending which way you want to look at it, than the 8.4 billion negative number that we had last time round. So we're still sucking in lots of imports and not exporting perhaps as much as we'd like to, but it is at least beating analysts' forecasts in that respect.
Okay, well, there's nothing that good from Europe so far, but anything good on the stocks front?
Well, a modest relief for anybody that's still long the mining sector. So the UK FTSE 350 mining sector ticker NMX 1770, trading around 11,520 just before I published my slides, up around 2.18%. The miners have bounced basically in line with Chinese equities, which are up around 2.2%, and some commodity prices, this could be famous last words, of course, do seem to have stopped falling for now, but it is important to remember that the sector remains at or very close to 5-year lows. So modest respite, but a long way for the mining sector to claw back. And then staying here in the UK, a bit of transatlantic read across. ITV, which is ticker ITVLN here in London, 262.53, down around 3.45%. And why is that? Well, simply because there's a direct read across from the sell-off in US media stocks. Now, we talked about Disney yesterday being sharply lower, the previous session and after hours, and there was no respite there either. And in fact, the rest of the sector sold off, such that it was for that particular sector, it was the worst two-day loss since the global financial crisis. So some are saying that say we're done in ITV, but maybe some of the transatlantic big gloss, if you will, on ITV has been rubbed off.
And the other thing also, I suppose, is the new economy in general, hit by Apple falling and possibility of a NASDAQ type of correction.
Yeah, I mean, that's our view as well. All I would say, of course, is that someone like John Maloney is probably sitting back and waiting to see how far some of these stocks fall. He's suggested that he'd be interested in content as well as connectivity. So who's to say that he won't enter into the fray at some stage?
Okay, well, let's go for the M&A.
Okay, right. Well, it's a story of a three-way merger between Coca Cola bottling businesses. So Coca Cola Enterprises, which is ticker CCE in the US, are trading around $53.40 up to the close last night, up around 3%. It's going to combine with Coca Cola Iberia, Iberian Partners even, and Coca Cola EFG in Germany. The deal is going to create a new company called, well, not very inventively, Coca Cola European Partners. Sales of around $12.6 billion per annum. What is interesting here is that Coca Cola Enterprises, CC, is actually going to up sticks and move across the Atlantic to be re-headquartered in Madrid. The group's going to service 13 European countries, and the deal should ideally produce savings of up to $375 million within 3 years. Doesn't sound that much, does it, really, against a turnover of 12.6 billion?
Maybe there are tax benefits of moving to Madrid. Now
that's also brings us to another point, because there's definitely a feeling that these inversion deals are back on the cards, and this could well be one of those. The deal itself said to be driven by Coca Cola, ticker KO in the US, and they're basically trying to cut costs and consolidate their associated operations around the globe. So that's what that's all about. But of course this is a low margin, high volume business, and that's perhaps why those savings are not so exciting. But I think you may have hit the nail on the head there. There's bound to be a tax element somewhere.
Okay, well, let's move on to the data points for the US, which we've discussed.
Yeah, well, all roads lead to the non-farm payrolls. There's obviously some other data within the announcement, but we start with the payrolls themselves. Forecast is for 212,000 new jobs created. That could compare with the prior read of 223,000. The question is simply this: do more jobs equal a September rate rise? A lot of people in the market would say yes, they do. So we'll have to wait and see exactly what the number is. But I think of equal import as the headline number is the actual unemployment rate. That's not forecast to change, interestingly. 5.3% is the forecast for July against the prior read in June of 5.3%. And the area that perhaps the Fed might pay close attention to, and indeed the area that spooked the market only a week ago, was wage growth in the States. Average hourly earnings are also part of this number, and for July they're forecast to grow by 0.2%. It's a figure that's often recurring as far as this indicator is concerned. But remember, in June they didn't change at all. We got a read of 0.0%. So there are 3 or 4 elements here in the payrolls data to look at. The headline number will grab all the forecasts. Often the first move is the wrong one. Let's see, we've got less than half an hour to wait.
So the only thing, I suppose, is that if we get like a 280, then then it really would be an emphatic.
Oh, absolutely, a number like that.
The bears and interest rates going up, and also maybe more than 0.2 there on the hourly earnings as well could actually have. So there's 2 chances in a way for.
There is, but what might throw the cat among the pigeons would if we saw an actual rise in unemployment, however small that might be. That would
right. So just confuse everybody totally.
I think it would, yeah.
Right. Okay. Well, there's plenty of intrigue there for sort of less than 20 minutes time. So just around that time. So let's go on to the market movers and levels.
Okay. Well, the first one is Cheniere Energy. It's ticker LNG US, $68.80, up 6.1%. The clue as to what they do is in the ticker there. Carl Icahn has taken an 8.1% stake in the liquid natural gas storage and marketing business, and I don't know that was anticipated. Seems to have come out of the blue. He's obviously very much an activist, and
he likes coming out of the blue as well,
shaking things up, and so that won't be the last we hear of that, I'm sure. And then Nvidia, well known for making graphics chips, NVDA, the ticker there, $22.30, up an impressive 9.05%. And they reported upbeat earnings last night, and in fact they, to use an American euphemism, they hit the ball out of the park. Earnings per share of 34 cents versus a forecast of 21 cents. Revenues weren't quite so good, but they still came in ahead at 1.15 billion versus 1.01 billion expected. So they're up 9%, and the market likes what it hears. In terms of levels to watch today, not too much going on, as you might expect. Well, everyone trying to stay calm ahead of the 130 number. So in terms of FTSE, we're looking for 67.20 as our downside number, plays 67.55 to the upside. In the DAX, 11,500 plays 11,580. We're really just trading around the range in both of those. In the S&P, 2075 now is downside level, plays 2103. We've just adjusted that really by 10 points from yesterday. And in the Dow, we're now looking at 17,399 to the downside, plays 17,500 on the upside. Of course, rate rises would probably be seen as negative for US equities on a good jobs number. And in terms of euro dollar, 108.96 now, plays 109.42. Aussie dollar 73.70 against 74.02 on the upside. Dollar yen stays above 124, and if a strong number, we'll probably see that weaken further. 124.40 is our downside level, plays 125.00 to the upside. And in cable, obviously sold off yesterday on our dovish MPC decision. A further strong read in the jobs number would possibly see some further weakness, but for now we go with 154.89 to the downside and 155.35 to the upside. Hasn't got too much to do with it to breach to the upside. Whether it gets an opportunity, of course, remains another thing.
Right. Well, it's all set for 20 minutes' time. We'll obviously see what happens, and sure, as you say, the first move tends to be the wrong one. So obviously, traders have to remain on guard. But Darren Sinden, market commentator at Admiral Markets, thanks for coming in today, and we'll be back on Monday.